the trade tensions that escalated in May were the big reason the market went down, but that reversed course in June, and now we've hit all-time highs here in early July. Today I'm going to talk about the turnaround in the stock market, also touch on some other things that are affecting stock prices and interest rates. I've got some great news if you're thinking of refinancing your home. I'll touch on that in a little bit. Hi, I'm Dave Wilson, founder and president of True North Retirement Advisors. Stocks had their best June in 64 years, and the market had its best increase in the first 6 months since 1997. And the reason for that is the surprising reversal of the Fed from tightening to easing. And investors were very enthused by that, and that caused stocks to hit new all-time highs in June and actually touch 3,000 in early July. Also helping is the fact that central banks around the world are easing and their economies are slowing, and because of that and our high relative interest rates here, in other words the 2% on the 10-year treasury here is higher than most developed countries in the world, monies from around the world are going into our treasuries and in our stock market. One important aspect that isn't discussed much that I think is critical to what has helped in terms of the all-time highs in the market, because if you think back in 2009, we had the 666, I call it, the devil lows on the S&P, and here in early July we hit 3,000. So that's a tremendous move up over that time. But what we've had is, over that 10-year period, we had $4.7 trillion of stock, or well over 20% of the stock market's value was bought back in shares. So that's shares that were taken out of the system, and that helps make the remaining shares more valuable and earnings stronger. And we're seeing that again this year. We're going to have 9% of stock will be basically taken out of the system from mergers and also from share buybacks. And that's very good, because if you did that over the course of a few years, again, it would have a tremendous impact on stocks. And there have been studies done recently where they showed that it really helps in terms of the stock price appreciation versus other economies, like I think in China, where they kept issuing additional shares. The market didn't do anything, and here it is, we've seen a very strong market for now 10 years. So nothing says that is abating, and I think that's more fuel for the market in the months and years ahead. Another aspect that is helping the market is there's so many investors that are still negative, very bearish. Money is still coming out of the market from investors. And when you're hitting new highs, it's very rare that you see new all-time highs and investor sentiment so weak. So I think that's a positive. It's kind of a contrarian indicator. And you need to worry when everybody's euphoric and my phone is ringing off the hook and everybody wants to buy, then the party's over. So the bull markets end on euphoria. We are nowhere near that. So that's given me, making me feel positive about the rest of the year. The other thing is money supply has been growing. Bond vigilantes have pushed down yields from 3.3% to 2.1%. And the Fed is in an easing cycle, we think, at the end of this month. Typically, when those things have occurred, the market has gone up 18% over the next 6 months. So you factor that with the sentiment and the other positive things that I discussed, and I think we could have a solid second half, but I don't think it will be as good as the first half, but I think it'll be very strong. As I mentioned earlier, if you want to refinance, if you have a 4.5%, 5% or higher mortgage rate, you should seriously look at refinancing, because, as I mentioned, the 10-year treasury has come down what we say is 130 basis points, basically from 3.3% to now 2%. That has caused long-term mortgage rates to go from 4.7 down to 3.7, 3.8%. So if you are locked in, or you have a 5% mortgage or higher, or even in the mid to upper 4% range, this is a time you want to be looking at refinancing. This is a great time. But again, don't just take my word for it. You need to, go through the numbers, see if you can really get some savings. But I think right now that's a great time to do it, because who knows how long the rates will stay down at these levels. But after 9 increases by the Fed since 2009, raising rates, they're now in the beginning, we think, of an easing cycle. I don't know if it'll be a quarter point in July and another quarter point in September, but it looks like interest rates are heading down, so we recommend that you take advantage of this. In terms of where we think you should be invested, actually one of the best places to be when you have an easing cycle and lower interest rates are rising dividend stocks, because and we've been advocating this for years, but the beauty of rising dividend stocks is you can get 2% right now in high quality dividend paying stocks, and the 10-year treasury pays 2%, so they're both paying the same. But the rising dividend stocks tend to increase their dividend 7, 8, 10% a year depending on the company. Now, they could also cut dividends, but that's what the trend has been, an increase 7, 8%. But with a potential increasing stream of income and the appreciation possibility of the stock prices going up along with the dividends, that is a much better place to be than, say, 2% for 10 years in a treasury. So we continue to think that rising dividend stocks are the place to be. When the market is hitting new highs like we are right now, that's when we like to use what we call the prudent man approach to investing. And what that means is looking at your stock allocation and lowering it down to a more appropriate level, using the appreciation that you've gotten in the great market we've had so far this year to get your allocation down to where it should be. The bottom line is the trend is your friend. The market looks strong heading in the second half. I don't think it'll be as strong as the first half, but I think we'll have a good second half of the year. I think the economy will actually pick up. So stay the course. This is Dave Wilson, founder and president of True North Retirement Advisors. The other day, I had a lady at a restaurant ask me, what's it like being bald? I didn't really have an answer for her. I know my birthday's coming up. Can I get like hair club for men? Something like that?